GM, good morning. Welcome to the Milk Road Show, the daily crypto show that is irresistible as buy one, get one free deal. I'm your host, Kyle Reedhead, filling in for Jay while he's enjoying his well-deserved honeymoon. It was a fantastic wedding this weekend. But joining me today is the legendary crypto investor, Lark Davis, and today we'll be talking about Ethereum and its struggling asset, ETH. For context, and this is actually quite wild, I was just looking this up this morning, ETH is down 40% in USD terms since its yearly high back in March. ETH is down 52% against Bitcoin since it topped out in September 2022. And now these are cherry picked numbers, so like it's a little bit whatever. But Sol has outperformed ETH 700% since bottoming out in December 2022. So I think many ETH holders are feeling the pain, even though funny enough, ETH is still up 8% year to date and 50% in the last year. So like it's not that bad. I don't know if we can really call it pain. But either way, all I see on crypto Twitter right now is Ethereum has failed. It's the next MySpace. ETH has failed as ultrasound money. And ultimately, ETH is just this overvalued, useless asset. So today, Lark and I are going to weigh in on our thoughts on this topic. But before we do, let's take a quick minute to hear from today's sponsor, Kelp DAO.
Get ready because your reward farming game is about to level up. Introducing Gain, powered by Kelp, your degen concierge. Gain is an automated vault launched by Kelp that maximizes rewards for ETH users. It offers one-click access to airdrops and points from leading L2s like Linea, Scroll, Karak, and more. Here's how it works. Head over to milkroad.com/Kelp Gain and spot airdrop Gain. Get a complete overview of how your assets are deployed and the rewards and points you stand to gain. With just a few clicks, deposit ETH or SETH or liquid staking tokens into the smart vault. That's it. The best part, once you deposit, you're issued a liquid token, AgETH, enabling you to participate in DeFi on Pendle, Spectra, Lyra, Splice, and others. Gain is already live and you can go check it out for yourself today. Just head over to milkroad.com/Kelp Gain and get started.
All right, welcome back. Lark, let's get this thing started. Why don't you just tell us what the heck is happening with Ethereum this cycle? Why are prices so slow and so boring in this asset? Are we doomed or what's going on in your opinion?
It's over, man. The Bitcoin maxis are right all along. Ethereum's done. It's cooked.
Damn it.
Vitalik's got a girlfriend now. I mean, it's the end times, man. It's the end times. Look, hey, real quick, I just like to tell everybody, Ethereum is literally my second biggest holding in my cryptocurrency portfolio. So we're going to be discussing some of the criticism and stuff we've seen online here recently, but don't think that I'm not bullish on the future of Ethereum as we go through this. I'd like to point that out. And the numbers that you have shared are pretty crazy because here's some interesting stuff. The S&P 500's up like 18% approximately something this year. Bitcoin's around current numbers, probably 32%, 30% something this year. So Bitcoin has significantly outperformed the S&P 500. Ethereum has significantly underperformed the S&P 500. If we can't outperform the damn boomer markets, the S&P 500, what are we doing, guys? Look, I think there's been a lot of justified criticism towards Ethereum. Some of the choices that have been made have benefited the Ethereum ecosystem, but not so much benefited the Ether asset price. And obviously, as Ether holders, we want to see the benefits of the price, right? So that's been part of the problem. But hey, at least Vitalik did post a picture of a cow the other day that had a little placard on it that said Ethereum is good. So nice.
We're still going. We're still moving.
We're still going, guys.
Well, let's talk about some of the changes that have happened with Ethereum just real quick. You said there's a bunch of changes that you said are good for Ethereum, but not so good for ETH, the price. Real quick, that's the L2 scaling roadmap, which appears to be working. I mean, L2s are reaching all-time highs on basically every metric. But I think one of the big takeaways from this, or at least what I'm reading on Twitter, is that L2s are parasitic. So we'll talk about that, I think, later in the episode. Anything else that's like, I guess, good Ethereum, but bad ETH? I think that's basically it, right? The L2 scaling roadmap.
I mean, look, the scaling roadmap, of course, is important, but I think one of the things that has been good for the Ethereum ecosystem, and bad potentially for the price of Ether because it's made just less demand on L1 in particular, has been the decision, and that's part of the L2 conversation, but the decision not to scale layer one. We got a lot of great stuff. We've got staking at layer one, and now we have this restaking stuff, and that's really been the biggest innovation on Ethereum in the last 2 years. I mean, 2020, we had DeFi, and DeFi was exciting and new. And I know Vitalik wasn't the biggest fan of that, although he is now putting some money in Aave, so that's good. He's finally dipping his toes into the world of DeFi after all these years. Vitalik, come on. The biggest gosh darn use case, or one of the biggest gosh darn use cases for your blockchain. So it's interesting to see at this cycle, the restaking thing has happened. And it's very interesting, very exciting, but it's also super nerdy. I mean, just, you really need to, using Aave, okay, you bring your collateral, you lend it, you get some money in exchange. It's a lending platform. Okay, easy. Restaking, well, there's this thing called Eigenlayer, and it's doing this stuff, and like you take some liquid staked coins. What's liquid stake? Well, you gotta take your Ethereum, you gotta put it in Lido DAO, then you get some liquid stake coins. You can take those and you can restake them with somebody else, and then you can actually restake the restake coins on top of that, and then take. Nobody cares about that crap, man.
We just did a restaking episode yesterday, so if you're not sure, go check that out on YouTube.
You're nerds. You're nerds. Look, the reality is that stuff's great, and I love it, and it's an interesting innovation, but it's not super normie friendly. It's not getting people super excited. Great for old whales who are holding lots of ETH and stuff like that, but in terms of getting people excited to use new stuff on chain, that's been a bit of a letdown. And I think the biggest problem, of course, has been the failure to scale layer one, and that's years off at this point. Yeah. So we've got a lot of great stuff, right? But if you want to really get the layer one chain cooking again, you got to scale the layer one, because on August 5th, when things hit the fan in the markets, I think at one point I was doing stuff on ETH and I had to pay a $600 gas fee.
Holy shit.
So Ethereum layer one's still broken. Now I know the fees right now are utterly dirt cheap.
Right.
But that's because nobody's using the layer one, or at least not to say nobody's using it. Lots of people use it every day, but there's not very strong demand for it right now because everyone's off on Tron. They're off on Solana. They're on Base, right? They're on Ethereum layer twos. So the Ethereum layer one is losing that mind share to an extent. And yeah, whales and stuff are still there. There's a lot of great stuff going on. But if you don't have a lot of people using the Ethereum layer one, you don't have the ultrasound money thing coming in. Now, look, Ethereum's annual inflation rate with 0% burn is 0.6%. I mean, come on, that's not bad, right? It's not bad at all. Bitcoin's still double that right now for context. But as long as we don't have much layer one traffic, we're not going to have a lot of burns, because after the blobs upgrade, layer twos don't spend a lot of money on chain anymore, at least not on layer one.
I think the other thing that is, I guess a little bit surprised, although to me, not that big surprise, but ETF flows have been pretty well non-existent the last few weeks anyway. It started out kind of okay, but it also launched in like not a bear market, but in a down only season for the last few months. So I don't know. I guess that's also weighing on it. I think a lot of people were saying, hey, this is kind of the last catalyst for ETH. And if these flows don't go well, then like what's left? And obviously they have not done that well. What's your thoughts on the ETF?
I've genuinely been shocked by it. And I wouldn't even say it started well. I think it started bad, because really the only flows we saw were, there might have been a little bit of like actual buying, but basically most of it was repositioning from Grayscale to BlackRock and Grayscale to Fidelity, people escaping that higher fees. I think it's 2.5% or something ridiculous like that to keep your ETH in Grayscale. So people are getting out of that, and there's been huge outflows from that. In fact, the last time I looked, and I can't imagine it's changed almost at all, the total outflows have been over $500 million. So we have had no positive inflows yet, only outflows. And what's shocking is last week on Friday, we had one of the most shocking days yet, because there was literally zero inflows, not a single penny, no outflows. Yeah, no outflows on the day. And the outflows have slowed down significantly, whether Grayscale sellers are waiting for better market conditions, or I don't know. I guess we'll find out. But it's shocking to see basically zero interest right now from Wall Street in these Ethereum ETF products. Will that last forever? No, I don't think that at all. But definitely when you look at how it has played out versus the expectations of how it could have played out, I'm pretty surprised, to be honest. And look, Wall Street will show up at some point. Maybe everyone's finally driving back from Long Island. They're getting back from the Amalfi Coast. They're going to come back to their desks on Tuesday or Wednesday or whatever, and they're going to, okay, it's time to buy some Ethereum ETF, start pushing this to our clients. We shall see. Over time, we will get inflows. Obviously, it's silly to think that it's going to be a complete failure, but so far, it's pretty hard to argue that it hasn't been super lame.
Right. So, okay. In terms of the asset of ETH, it has definitely underperformed, has not done very well. There's not a lot of interest, at least on the ETF side of things. And because the fee revenue has gone down on Ethereum, it's no longer quote unquote ultrasound money, right? It's not deflationary, although none of
It
its
still
competitors
is
are.
by a little bit, but
Right. It depends on the time frame you
yeah.
go for, but none of its competitors are either. Bitcoin is not deflationary. Sol is not even close to deflationary. But either way, the revenues or the fees on Ethereum have gone down significantly. And so there's a lot of concern about Ethereum for the last, let's say, 4 to 6 months because it's been beaten by everything and the asset has just not done well. But let's flip it and let's just look for a second on the fundamentals. Let's look at the metrics of Ethereum. And I guess you can look at this many different ways. What are your thoughts and how are you looking at it? Is this also bearish, or are we getting a bit of a divergence where like maybe the metrics are doing well, but the price action not doing so well? What's your sort of take on this?
The metrics are still insane. Ethereum is a wildly successful blockchain, and I know it's been popular recently to trash on it, and there are some pretty valid criticisms, and some things to be saying, hey, why is this the case? Totally fine. The truth is, though, is that Ethereum, by many, many miles, has the biggest total value locked. It still has 350, 400,000 sort of daily active users, whatever, like huge amount of daily active users. A lot of stuff still being built over there. Many of the core protocols of the industry are built there, whether we talk about Aave or Maker or Curve or a lot of other stuff. And I know those have all gone multi-chain now, but their home for all these things is actually on Ethereum layer 1. So we've seen a huge amount of success from that regard. I think there's still a huge amount of mind share behind Ethereum, a huge amount of just really everything, big money, big interest. So it's really set the standard in so many ways for the industry, what a smart contract blockchain should look like and should be doing and stuff like that. And obviously it's getting challenged right now, as it always was going to do. And it's actually interesting to finally see real challengers stepping up to the plate, because I've been talking about Ethereum nonstop since 2017, guys. And all that time, I've heard so many, what anybody remember Icon from back in the day, the South Korean Ethereum, right? There's been so many Ethereum killers and Ethereum clones and the Ethereum of China, the Ethereum of South, all this kind of stuff has popped up, okay? Basically everything lays in a dustbin of history of blockchains. What's interesting, though, is that in the last couple of years, we've actually had real competitors step up, and we've seen Solana, for example, in a big way moving up. Stuff like Tron, whether you love it or hate it, has stuck around and actually been very popular for years, which is interesting. I think the sort of broader Western audience generally despises Tron because of Justin Sun's marketing tactics or whatever. But the reality is that Tron's actually seen some of the biggest adoption of any blockchain, because people in like Nigeria or Argentina are using Tron to send USDT to each other. And that's like a massive use case because it's so cheap. And now they can use Solana and stuff as well. But, once you get on a blockchain, you kind of get familiar with it. You kind of stick there. It's kind of what people do. So there's been a lot of competition finally starting to eat into Ethereum's market share, whether that be in total value locked or total users. And you look at some of the Solana statistics and the daily active users and all this stuff, it's absolutely insane. Solana's got its own issues right now. Solana is basically a giant casino at the moment, and it feels reminiscent to me of where Ethereum was back in maybe 2017, where it was a giant casino for ICO tokens, right? And now Solana is really finding its footing. And you honestly think about this when it comes to Solana. I bet the most people out there couldn't even think of a single game being built on Solana, or could maybe not even name more than one DeFi protocol on Solana. But there's a lot of them. There's a lot of stuff happening over there. There's huge economic activity starting to happen outside of the casino, but the casino remains the most popular use case right now for Solana. But Ethereum's matured beyond a lot of that stuff. We have very mature markets on Ethereum. We have very mature protocols over there. So to say that Ethereum's failing, definitely not the case. It has underperformed, obviously. The hype has definitely gone somewhere else this cycle and may continue to do so. And it's not to say that the Ethereum developers can rest on their laurels and stay in their ivory tower forever. They have to keep pushing this thing forward, right? We need layer 1 scaling. And that's going to be the big ticket that really gets Ethereum's dominance cemented for the long term.
So I want to get into my take on what's happening with ETH, and I want to get your opinion on it, which we didn't talk about this before the show, so it's going to be literally your take out of nowhere.
I'm ready.
But before I do that, what is your thought around? So you kept saying that we need to scale the L1. Do you think then L2s are parasitic to ETH, as a lot of people call it on Ethereum, on Twitter, or do you think L2s are ultimately a good thing for ETH?
L2s are ultimately a good thing for ETH. It's one thing to say parasitic, and that sounds like a pretty hot thing to say. Realistically, it's a symbiotic relationship. Ever since blobs, this new tech that was rolled out, we're not going to get to that, but basically the fees for layer 2s settling to layer 1 went down massively. So right now, layer 2s are not providing a lot of burn for Ethereum layer 1. So they're using Ethereum's security. But the argument is, well, they're parasitic because they're not really paying all that much back to the layer 1. So Ether whales and stuff with holders are not really benefiting all that much because we're not really doing the ultrasound money thing right now. Okay, fair enough. The problem with that thesis is that Ethereum layer 2s have provided unimaginable demand for Ethereum this cycle. Look at Base. Base has got 14 million daily active addresses or something like that now. It's absolutely crazy. Arbitrum continues to be, well, in a distant second place. Linea, pretty relevant as well. So between those 3 layer 2s, they capture about 80% of users or slightly more. But these are driving massive demand for Ether, because if you want to use any of that stuff, guess what? You got to go and put a little bit of Ether in your wallet. Now, you don't need $1,000, right? Like you do on the main chain. We'll make 10 transactions on Uniswap when the markets are heating up. You better have a lot of money on your wallet. But it's good because Coinbase is showing massive success with their base chain for an Ethereum layer 2. And you always have to keep things in mind. When Sony came out the other day and said, hey, we're launching this blockchain initiative, right? Where did they go? Where did they go? Right? Did they go and build it on? We don't want to throw into blockchains at the bus, okay? We don't want to trick everybody. But they didn't build it anywhere else. They built it on Ethereum, right? They built it on an Ethereum layer 2. Okay, so that means something. When Larry Fink is out here talking about tokenizing everything, where do you think he's talking about building it? He's probably not talking about building it on Tron, okay? He's probably talking about building on Ethereum.
Which he is.
So, you got to keep this in mind that these short-term challenges for Ethereum have always been there. Ethereum's always been this behemoth, this tank driving down the highway at 100 kilometers an hour that the devs are constantly tinkering with to make it more efficient and lighter and better and all this stuff. And there's been so many great upgrades over the years. ETH's the beast, right? And the layer 2 has been wildly successful in driving huge demand. I saw some statistics. I can't remember exactly what it was. It was something about like 10 or 11% of all ETH now is on layer 2s. So that's a lot of demand that has been created by these layer 2s. And that's only going to get bigger when other corporate think Sony's going to be the last one to launch a layer 2 on Ethereum. No, they won't be.
So very actually in line with what I'm about to say. I think what's happening, and you let me know your thoughts on this, but so Sol and Tron have done really good basically over the last, let's call it year, right? They've outperformed ETH. And a big reason for that is their fees have gone up. The revenue that these two chains make have gone up big time, right? Whether that's revenue from MEV or revenue from gas fees, whatever it is, it's gone up and up and up because it was basically zero like a year and everything before that. They had no revenue because they had no users, but they have had some pretty significant growth in terms of fee. Whereas Ethereum has actually gone down and down and down, partly because, as you said, L2s are taking over all the activity. And by the way, they're taking over tons and tons of activity. If you combine Ethereum and all the L2s, its transactions, its users just looks like it's going exponentially up and to the right. But some people only look at ETH instead of both. And so as a result of that, plus just we've been in a shitty market, not a lot of people are using anything really. And so Ethereum fees have gone down and down and down and down. And so people are thinking, okay, well, fees are up over here on Solana and Tron. I got to invest in Tron, and fees are down here on ETH or on Ethereum. Then it makes no sense to hold any ETH. And I think what people are missing is, one, Ethereum fees 2 years ago were just way overvalued, or just were way bigger than they would ever be, right? Like it didn't, like, as you said, people were transacting, paying $50, $100 to transact. And like, that was never going to be a sustainable thing. So we're sort of just like leveling back out. And I think we're just in a kind of shitty time in the market. So not a lot of people are using anything. And so fees are fairly low everywhere. But ultimately, I think fees continue to go down on all chains because we're going to continue to scale blockchains. And so fees are just going to get cheaper and cheaper and cheaper. And that's the goal of basically every blockchain, is to find out how can we remove MEV. so that people are getting screwed over? And how can we lower fees even more? So I actually think fees is not a way to value L1s. I think that actually doesn't matter. I think what matters is valuing these assets as, and this is only for native blockchain assets, so your ETH, your Sol, your Bitcoin, your Tron, whatever, as money. And when I say money, I don't mean money as like, I'm going to use this to buy my coffee. I mean like money as in collateral and DeFi, staking. I mean trading pairs, indexes. I mean gas fees. I mean all these different things. And for me, what have L2s done? They've created more ways to use my ETH, whether it's for staking or restaking or collateral in Athena or Maker or Aave, or like list all the different reasons that I'm going to use my ETH, both on the ETH L1, Ethereum L1, and on all the L2s. It's just created more network effects, more demand to use my ETH. And Solana has done that on Solana if it continues to grow. But Ethereum, for Ethereum anyway, for ETH to get more demand, it just needs more L2s or more activity on any L2 or on the L1. Doesn't actually matter, right? And so it's similar to the way that we kind of value Bitcoin, which is like, we don't look at the revenues of Bitcoin. We don't look at the fees of Bitcoin. No one cares. We actually know they're not good at all over on Bitcoin, but we see Bitcoin as money or more a store of value. And I think ETH is the same thing, except ETH actually has things you can do with that store of value asset, whereas Bitcoin, there's just not really much. So
Store your value.
Exactly. Just store of value. That's kind of it. You can't use it for anything. You can't get any yield or do anything else. So I think it's just going to take a bit for the industry maybe to flip and realize, oh, actually fee revenue doesn't matter that much for blockchains. It does for applications, but I don't think it does for a blockchain. It's more the money of that asset. I don't know. What do you think on that? Is that sort of the way that you value it as well, or am I way off here?
I think it's a pretty good point to make. Oh, by the way, Bitcoin layer 2 conversation, that's something for another day.
Yeah.
But look, I think to that point there, valuing Ethereum at its current level, it's so interesting how almost always the whole layer 2 ecosystem is left out of the conversation, when realistically that is all a giant part of the entire Ethereum ecosystem. And if you look at all that as a whole together, again, Ether is so far ahead of everybody else. It's actually crazy. And I know the death of any crypto asset gets talked about many, many times. The amount of times I've seen Bitcoin's dead or Ethereum's dead or this is going to flip Ethereum. And look, finally, we have real competitors stepping up to the plate here. My sort of general thesis on layer 2s and layer 1s has always been this, is that you're going to see massive concentration in about 3 to 5 at max layer 2s, where they're going to get 90+% of the users, and the other hundreds are going to be left to fight for the scraps. And same with layer 1 blockchains. You'll see 4 or 5 layer 1 blockchains that take 90% plus of the users. And to an extent, I think we're already seeing that start to be established. Now, that can be shaken up over the years, but new layer 1s coming into the space, man, what are you doing? You got such a hard road ahead of you to try to build users and hype and excitement to get money on your chain and all this kind of stuff.
Yeah.
Holy cow. Whereas ETH's got the reality that it's the first mover, right? It's been here for a while, and it's continuing to develop in a very positive way. So in looking at things like fees, revenue for the blockchain and stuff, not a big deal. The one thing that does need to be solved just for ETH to have the wild runaway success that I believe that it will, is to get layer 1 scaled, which is going to come, right? That's a couple years down the road, but it kind of doesn't matter when it happens. It just matters that it happens at some point, because realistically, you can't continue to have a layer 1 blockchain that when crazy times hit in the market, you have to pay $600 in fees, right? That's just not sustainable. Even for the bigger users who have got a lot of money on chain, things start to get to the point where they barely even work during the periods of peak mania or peak fear in the markets. So that's got to be addressed at some point, and that is being addressed, and that becomes a non-issue in a couple of years. And until then, I mean, I don't know about you, but for me personally, I love Ethereum and I love the layer 1 blockchain. I've got a lot of fond memories of doing a lot of degenerate, crazy crap over there. But I spend probably 95% of my Ethereum blockchain experience these days on layer 2s.
100%. Absolutely.
You know, so I'm already there, and I love using layer 1, and I've got some of my bigger things that I do on layer 1. You know, I've got like a big loan in Maker DAO, right? And that's done on layer 1. right? Now there's layer 2 options to have done that, but I chose to do it on layer 1 for peace of mind and security and all this kind of stuff. Fantastic. Now a lot of whales will choose to do that, right? Not to say I've got so much or whatever, but it's enough that I'd prefer to do it on layer 1 versus a layer 2, right? Not to say I'm questioning the security layer 2. It just psychologically feels like the right thing to do, in spite of the fact that most of my economic activity in the ETH ecosystem is on layer 2.
Yeah, and honestly, it could be on L1, L2, doesn't matter. As long as there's demand for ETH, like as long as people are using something in the Ethereum ecosystem, that means that there's demand for ETH. And so like, I just don't see how anyone can be bearish when Ethereum has 10x the amount of developers as any other ecosystem that exists. And as you already mentioned,
layer 2 charts. Look at those layer 2 charts, man. They're all going like this. It's just absolutely insane. They're rocketing higher with daily increasing users and more developers coming on board and more projects deploying. It's absolutely crazy.
And as you mentioned, Sony launching an L2 on ETH. Time launching L2 on ETH, was that last year? I think this is that. BlackRock launching a fund on ETH. So it's like, how can one be bearish? I understand fees and revenue have gone down, but does that really matter? I just really don't think it does. And I think we all need to change our mindset of how we're trying to value this or how we're trying to see the success of these assets. So with all this in mind, Lark, what do you think? Is it like we got to wait for a few years for ETH to finally like hit its true value, and so like it's going to skip out in this cycle and we just be in Solana or whatever else Tron? Or like, what do you think is going to happen in this cycle or in the next, let's call it 1 to 2 years in ETH?
I'm looking forward to the rally. It's going to be the most hated rally because so many will be sidelined on it. Look, I still think we see a 5-digit Ethereum this cycle, assuming that there's not some like macro craziness, horrible Great Depression, recession, whatever. Okay, as long as none of that happens, we have a relatively standardish flow of our cycle. Then ETH's going to 10K, potentially a market peak somewhere between 15 and 18K, like pico top stuff, right? That's obviously just, predictions, right? We don't know what the price is going to do, but I feel like 10K, man, if we can't get to 10K this cycle, it is a disappointing cycle for Ethereum, but it doesn't mean that I would, be some permanent Ethereum bear at that point. When the bear market comes and ETH goes back down to whatever it's going to go down to, I'm going to load my bags back up, man.
Yeah,
because it's ETH, obviously.
And when it moves, like you said, it's going to be a hated move, which means it's going to move fast. Like you said, so many people have got out of this position and are holding, I don't know, either Bitcoin or US dollars, like, or Sol or whatever. And a lot of people, I mean, there's still a lot of people that hold ETH. Obviously, it's a, $300 billion asset. So like, there's still some holders of it, of course. But I think a lot of people that have big capital have kind of moved out. And I think they're waiting to see it break out against Bitcoin or Sol. And whenever it does, there's a lot of capital that can easily flow into that, especially because we have ETFs. And so when people notice like, hey, it's going to have its moment, I think it's going to move really, really fast. So we're going to go from, I don't know what we're at now, 2,500 or something to 10K. It could be really freaking quick. So hold on to your butts and make sure you're allocated before all that happens. All right. Well, we'll wrap it up there. Lark, thanks so much for coming in and explaining what the heck is going on with ETH. For those that are listening, let me know in the comments below. What are your thoughts? Are you still holding ETH? Have you sold your ETH? Do you agree with what we said in terms of how we're valuing it in terms of just as, let's call it money or collateral, or do you look at different things? Please let us know in the show notes or in the comments. Sorry, it really helps us to understand our listeners more and allow us to continue to create better content. And don't forget to subscribe to our channel. Lark, thank you so much for joining, and everyone else, have a wonderful day.
As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.